Hello, my name is Gillian Bento. This video is for the Intermediate Accounting 2. The company that I choose for this project will be Apple Inc. If we saw the Apple statement of financial position, property, plant, and equipment, we can review from them that the net property, plant, and equipment during the last 3 years has a positive behavior. Apple machinery, equipment, and internal use software increased from 2014 from 29 billions to 37 billions on 2015, and from 2015 to 2016, 44 billions. The company capitalized eligible costs to acquire or develop internal use software that are incurred subsequent to the preliminary project stage. Capitalized costs related to internal use software are amortized using the straight line method over the estimated useful life for the assets, which range from 3 to 5 years. During the past year, the company has invested in capital equipment as needed to meet anticipated demand for its products. In past years, company retail store have required an enormous investment in equipment, leasehold improvement, information system, inventory, and personnel. Certain stores have been designed and built to serve a high-profile venues to promote brand awareness and serve as vehicle for corporate sales and marketing activities. Because of their unique design elements, locations, and size, these stores require substantially more investment than the company's more typical retail store. Due to the high cost structure associated with the company retail store, a decline in sales or the closure or poor performance of individuals or multiple stores could result in significant lease termination costs, write-off of equipment, and leasehold improvement and severance costs. If property, plant, and equipment, inventory component prepayments, and certain identifiable intangible are considered to be impaired, the impairment to be recognized equals the amount by which the carrying value of the asset exceeds its fair value. The company does not amortize goodwill and intangible assets with indefinite useful life. Rather, such assets are required to be tested for impairment at least annually or sooner whenever events or changes in circumstances indicate that the assets may be impaired. The company amortizes its intangible assets with defined useful life over their estimated useful life and reviews these assets for impairment. The company typically amortizes its acquired intangible assets with definite useful life over periods from 3 to 7 years. Overall, Apple's history of business acquisition has involved relatively small companies. More often than not, the acquired firms have directly resulted in key new apps, products, features, and services that have materially benefit Apple's core business and enable it to expand into new ones. Included in Apple's accounting of acquisition are investments made to obtain a portion of a company, whether a team, a facility, or manufacturing equipment. This kind of selective investment avoids acquiring unwanted personnel, infrastructure, and business that are only a distraction and drag on operations. Depreciation is computed by the use of a straight line method over the estimated useful life of the asset, which for building is the lesser of 30 years or the remaining life of the underlying building, between 1 to 5 years for machinery and equipment, including product tooling and manufacturing process equipment, and the shorter of lease term or 10 years for leasehold improvement. Capitalized costs related to internal use software are amortized using the straight line method over the estimated useful life of the assets, which range from 3 to 5 years. Based on the balance sheet, it is very clear that Apple Inc. have been investing in the acquisition of talent, technology, and production capacity during the last few years. The company is being paying for a target company's non-depreciating assets, payments made for property, buildings, and equipment, and payments made for goodwill, such as intangible value of acquired value of firms, customs, and reputation.